All right, well, let's head back to Davos, where Standard Life Aberdeen's Martin Gilbert spoke to Yahoo Finance's Julia Roche to discuss everything from the fourth industrial revolution in financial services to climate change.
Well, I think I've recently joined the board of Revolut, so that's a very good example, I think, of where we are seeing the fourth industrial revolution, in that the banks are making good profits in certain areas. Same with asset management making good profits as well, good operating margins. So it does give the profits for the startups, the fintechs, or whatever they are, to look to get their market share of.
So you were just mentioning Revolut. Explain what that is and what the opportunity is there.
Well, it's an electronic money transfer business. It's prepaid credit card. So the opportunity and the benefit for users is clearly the sharper the sharper exchange rate that you get if you do use that type of card. So it's a good example, I think, of that sort of industrial revolution.
So there are a lot of disruptions going on. You were just mentioning one about payments, I suppose. How about when you look at the asset management business, particularly active management? Are you seeing any sort of disruptions there?
Yeah, no, I mean, we're seeing it because, as I said, the asset management industry traditionally has been a profitable business. So we're seeing it in the move from active to passive. Mm-hmm. We're seeing it in fee compression. We're also seeing it in an area that the retail investor hasn't really had access to any great extent yet, which is from public markets to private markets. So we're definitely seeing disruption in the business.
I want to talk about this active versus passive, because you're right. We're seeing this proliferation of indexing. Does that create distortions? What kind of impact could that possibly have?
Yeah, I mean, clearly, if all assets became passive, it would be one extreme. But I think the opportunities for active asset managers increase as more assets, more equities, for instance, fixed, become passive. So I think it's a huge opportunity for active fund managers now to outperform and to create value that we haven't actually over the last sort of 5 years to any great extent. So I think it's a huge opportunity for us.
You're of the mindset that active is not dead. You often hear that passive is going to be killing active.
No, active is not dead. I think there's room for both. There are certain asset classes. Certain investors want access to an index at a cheap price, and there are others that want access to stocks and stock pickers. So I think it's a mixture of both. I think there's enough. There's enough room for everyone.
Room for everyone. I want to talk about climate change. This is something that's also going to come up at the World Economic Forum, and we are on the heels of Larry Fink's letter that came out. What can financial services do, or how should they think about climate change, just broadly?
Yeah, no, I think as owners of companies, we have a responsibility in that area to ensure companies behave properly. So I think I haven't read Larry's letter in detail yet. I've just seen all the headlines on it. But I agree with him. I mean, as owners, we have a duty to the individuals, the sovereign wealth funds, the asset owners that entrust us with their money to ensure the companies do the correct thing. But across the board, I think we've got to act like owners rather than investors.
And before I let you go, what is the one risk that's on your radar in 2020? We're talking a lot about risk here.
Yeah, I wish I knew. I mean, I'm worried about equity markets. I'm worried about bond markets. I'm worried about property. But as they say, these bull markets climb a wall of fear. So I think the good thing is that people are worried about the levels. But of course, at these sort of interest rate levels, where do you put your money apart from in equities? Equities probably number one, bonds number two, and cash is probably the least favored asset class.